to break down some of those factors on what SEBI has done and what SEBI has not done so far. We're joined by Deepak Shenoy, founder and CEO at Capitalmind. Deepak, great to speak with you in the morning today and to have you on the show. Let's start with what SEBI has not done yet, the yet bit being in brackets, which is any tightening on F&O regulations. It was widely expected we'd see something after the board meet. Is that a sigh of relief for the market right now, or is it a wait and watch of when it finally comes and that penny drops?
I think the wait and watch, Taman. I don't think this is a foregone conclusion that it won't ever happen. It's more like it will happen, but probably in the next board meeting or something like that. The point over here is there are a bunch of regulations that are anyway coming and affecting the brokerage industry and the securities industries. So I think they might want to spread it out a little.
Deepak, one of the things that our colleague Sajid, good morning to you, of course, Neeraj here. One of things that our colleague Sajid put out this morning that SEBI may not even need a board meet or a board resolution to introduce some of the changes for the derivative segment. So could it also happen, Deepak, that these things might get introduced in between board meetings, as important as they are? Could they just get introduced as normal resolutions without a specific board resolution?
Yeah, I mean, these are actually normal operational things. For instance, if you do something like saying the lot sizes need to be changed or something like that, this can come through a regular circular. Doesn't need a formal board meeting kind of thing to change. Of course, if you're changing something very specific to certain regulations, that might need to go through a board meeting. But I don't think there is any, I mean, for instance, if they were to increase margin requirements, that would be a normal operational process. If they were, but if they were to say that certain people cannot participate in the F&O part of the market, then that might need a board meeting, because you've got to then figure out what these criteria is to exclude people who they think are not suitable or something like that. For instance, introduce an exam requirement or introduce a net worth requirement or something like that. I don't think any of those will happen. It might just be an increase in margins, reduction in number of expiries, and so on. Remember, the number of expiries were also increased without a board meeting, I think, because they were just given to the exchanges to deal with, and effectively SEBI dealt with them on an operational basis. So even reduction may not require a board meeting. So yeah, it could happen mid, cycle. It doesn't need to wait till the board meeting, next board meeting happens.
So they can do it mid-cycle, but if they're going to decide who can invest in F&O, then that needs a board meeting. Is that
I think,
conclusion?
I mean, it depends on the contours of what they decide. For instance, if they say it's an exam, that may not be such a big deal. But if they say there's a net worth requirement, the board will want to get involved to be able to give their decisions, right? So it won't be it better be something that's more widely discussed within SEBI itself.
That's fair enough. Now, the other thing which I thought was interesting, Deepak, is what they've said on MF Lite, which is a new MF registration potential for passive fund and only mutual fund AMCs. I think your take is that this will increase inflows into passive funds. Does this make ETFs more attractive?
No, none of the above. ETFs and index funds are attractive or unattractive as the case is. But I think here what it does is it introduces the capability for more entrants to come into the mutual fund industry and offer only passive funds. This would, for instance, somebody else wants to offer a Nifty kind of a fund or a different form of index fund. They don't need the more higher net worth requirements of, say, other mutual funds. We don't know the details yet, but I'm just thinking this might be the criteria. This is what we discussed in the MF Lite consultation paper, that there would be lower disclosure requirements. For instance, you don't have a 10% limit on securities ownership. So, for instance, an active mutual fund cannot own more than 10% of any company of its AUM, a mutual fund scheme. However, this does not apply to indexes. If an index has 17% of a certain stock, then you have to buy 17% of that stock. So the disclosure requirements, therefore, will come down for an MF for a mutual fund that is only passive, because it doesn't have all these criteria to kind of watch for more than 10% and so on. So there is a better system in place. rather better in the sense of less disclosures, simpler operating processes for a passive mutual fund. And as a disclosure, we have applied to be an active mutual fund. So just saying that we are possibly interested in a system like this, but we are probably not going to be a passive only fund. So it will probably help other people apply.
Interesting. I didn't know there was this distinction that you can do only one versus the two. Interesting, Deepak, though. Thanks for pointing it out. Deepak, just wondering, capital market players and brokerages per se, they've had a fabulous run thus far, right? Now, even though earnings for one or two of those listed names may not have fallen, the fact that the market now believes that the regulatory framework is not necessarily aimed at enhancing their business prospects, the multiples have derated for the one or two names that are listed. I'm just trying to understand, where are you on the investability case for some of the brokerages, maybe AMCs too, because you're not listed, so you're technically not an interested party per se thus yet. So where are you on the investability case of some of the capital market participants?
So it doesn't change so much for the AMC industry. Of course, the AMC industry will benefit this MF Lite regulation and perhaps lower disclosures even for currently existing AMCs. But they will, the brokerages, for instance, will have some kind of a revenue hit because they had about 5 or 6 levers of revenue. It was brokerage, it was this non-true to label exchange transaction fees. It was the float income that they earned from the cash that they held of customers. It was the margin and the interest that they pay that they receive from customers when they lend them for margin trading or margin funding. All of these activities have seen a reduction in their revenue over a period of time by SEBI tightening the rules and saying, well, you have to you cannot hide certain things from customers. You can't hide things that are actually interest, but they're sitting in your margin ledgers and so on. So a bunch of things have happened. Float income. There was only earlier the ability for in Carvey stockbroking case where brokers, that particular broker was actually lending out customer securities and taking money for himself in terms of a loan. And when that loan was not repayable, customer securities were at least attempted to be sequestered by even the likes of Bajaj Finance and HDFC Bank. So it's not like some random lenders doing this. And this was curbed by SEBI in 2018, and a bunch of those revenues which were possibly not correct for brokerages to have given have gone away. However, I believe longer term that there is a lot of scope because more and more people are coming into the stock markets. Even your core source of revenue, if it was just brokerage for F&O and for cash stocks and for commodities, I think that itself is a very, very reasonable, reasonably large market for companies to earn a significant amount of money. So, of course, instead of a 40 multiple, you'll give them a 30 multiple perhaps today. But I think in the longer term, revenues will come from their core business rather than all from these ancillary kind of sources.
Deepak, in your view, what is the biggest and most impactful outcome from the board meet yesterday? Is it the one where insider trading definitions have been expanded, or your requirements for an agent, etc.? Does that have a bigger impact for capital market players?
So it depends on who you are. If you're an investment analyst or research analyst, you'll care about that part of the regulation. If you're a broker, you'll care about this part of the regulation. So it's a different bag. For the market as a whole, there is a small regulation on P notes. I haven't analyzed that in much more detail, but there is some restriction on what P notes can do in terms of holding derivatives, and that might be an interesting impact on the market. There is also an MF regulation on an alternative asset class, which allows mutual funds to offer schemes that do a little more than just buying stocks. So perhaps buying speculative positions in derivatives for a short term without introducing too much risk in the market. Of course, all of this is just in the press release, but we don't have exact details. Once we have details, we will know exactly what they mean, especially the connected person bit. currently, if you suddenly start, everybody's connected by the kind of new rules that have come in. So at some point, you're going to find that the owner of one company, by the time you do all the loops of wife and spouse and daughter-in-law and all of that, you'll reach 150 other companies who will be deemed to be connected for the purpose of having unpublished price-sensitive information, which is therefore a very difficult task for SEBI to defend itself even in a higher court, because you can't say that, oh, because somebody was a shareholder of one company and something 7 steps removed is supposed to have this unpublished price sensitive information, and therefore it will be a judicious use of that thing, but it's too broad a framework. Eventually, courts are not, higher courts are generally very cognizant of this, saying you can't put too broad a rule. So you have to be careful that this connected person regulation, when it finally comes out, I don't know what the final thing is, should not be so broad that it becomes useless for defense in case of an insider trading investigation. That's the only thing I would say. But we'll have to wait till the final print comes.
Definitely, and we'll have to wait till the F&O regulations come into force. In which way are they graded? Are they staggered? That's really what we need to see. Deepak, always a pleasure chatting with you. Thank you so much for joining us today.
Thanks so much, Tanu. Thanks, Neeraj.
Thank you.